My name is Julien DULOT, so I'm working in the legal unit, as Peter said, and I will be also accompanied with by my colleague Isabelle Leroy, that will also help me to handle your question afterwards. You have asked in the Slido tool. And yes, indeed, a colleague from DG Budge, Niklas will also help me to do this presentation, and will focus on daily rate calculation today. So this will be our journey together. I will focus on main key legal and financial aspects stemming from the Model Grant Agreement, the Horizon Europe Model Grant Agreement. So I will try to give you details and relevant information as much as possible, but taking into account the time, of course, we have for that, and leaving enough time for Slido question afterwards. So we will start with the so-called corporate structure of Horizon Europe Model Grant Agreement. So how it looks like, basically. This Model Grant Agreement you will sign if your project is successfully retained for funding, and then you are at the end of the gap stage. Then we will focus on the type of participant that can be involved in the project. Then we will move to the personnel cost aspect, and especially the corporate, so-called corporate daily rate calculation, where my colleague Niklas from DG Budget will tell you more about that. Then I will take over again and present you the main features of the so-called project-based remuneration, which is a specific we have in Horizon Europe in terms of personnel cost eligibility aspect. And we will terminate this little trip together by a couple of words on the certificate and financial statement, so that you have a good overview of this main legal and financial aspect embedded in the Model Grant Agreement for Horizon Europe. So let's get started with the basics, I would say, but which is very important, I think, to recall to all of you. I think you have heard already that from previous presentation, previous intervention from us, from the Commission, about this so-called corporate approach and corporate Model Grant Agreement. So to cut it short, corporate, you can replace this figure of speech or this wording by Commission-wide Model Grant Agreement, something to be used not only by one program, but Model Grant Agreement or master file, master Model Grant Agreement to be used as a basis by all EU program under direct management. And then these programs are, of course, able to customize a bit this master document and have it adapted for the needs of the specific policy objective they are pursuing. There will be three main corporate Model Grant Agreement, three main master document, if you prefer. A so-called general corporate Model Grant Agreement, which is actually the one I would say commonly in use so far when we finance a project, especially in Horizon, before Horizon 2020 and now in Horizon Europe. So what is it? It's basically the Model Grant Agreement where we reimburse most of the cost on an actual cost basis. So you declare your actual cost and we apply a reimbursement rate on those actual costs. But you may have also embedded in this Model Grant Agreement alongside the actual cost, some unit costs. For instance, I will give you a simple example. You may declare a cost of employee under actual cost, and you may have also for other employee or other categories, some people you declare via the so-called average personnel cost, which is a unit cost. And you see in the same action with this general Model Grant Agreement, you will declare cost on an actual cost basis and on a unit cost basis. So this is why it's called a mixed budget-based mixed actual cost grant. Then we will rely on this corporate unit-based Model Grant Agreement. So here, to illustrate this very quickly, it's basically the Model Grant Agreement you will sign for Marie Sklodowska-Curie action. So fully based on unit contribution approach, living allowance, family allowance, and also new allowances introduced for Horizon Europe, like for the special needs of a researcher, for instance. So we will also rely on this corporate Model Grant Agreement. We will have an Horizon Europe Marie Sklodowska-Curie unit-based Model Grant Agreement. And there will be also good use, certainly an increased use of the so-called corporate lump sum based Model Grant Agreement. So where here it's basically the continuity, the legacy, so to say, of what has been introduced in Horizon 2020, and which was the Horizon 2020 lump sum pilot Model Grant Agreement, where we reimburse everything. So a global lump sum amount covering the whole action, split per work package and per beneficiary. So we will also rely on that. Just to give you an overview of the common structure of the Horizon Europe Model Grant Agreement you will sign. So this corporate structure. I know time is limited, so I will not repeat what is written on this slide, but just I think main novelties that I should stress is certainly the introduction of this so-called datasheet. You can see on the left side of your screen, where you will have a summary of the specific data information of your grant agreement: duration, type of participant, budget aspect, reporting period, calendar, specific cost eligibility, budget cost category, activated or not in a given action. So you will have a pretty good overview of your main legal and financial aspect in the first pages of this model grant agreement. This is really, I think, a takeaway message, the main one you can keep with you from this slide. And then the structure will be, without entering into the details, somehow similar with the structure you already know for Horizon 2020. In terms of annexes, we will have also something very similar with what we had in Horizon 2020. Here, I would like just to focus on this so-called Annex 5 specific rules, where I was just mentioning this corporate commission-wide model grant agreement approach. Basically, if I summarize the things, the main area for customization for each EU program is this Annex 5, where we basically put our explicit policy-related provision that we want to have, of course, complied with by our beneficiaries. So for us, for Horizon Europe, it will be these big boxes on the right side. Everything speaking about security, ethics aspect, values, of course, intellectual property rights, communication, dissemination, and open science related provision. And depending on the type of the Horizon Europe action, you will have specific rules also displayed in your Annex 5. So for public procurement, so pre-commercial procurement and PPI procurement, or co-funded partnership, or if you sign an ERC action, you will see a specific text dealing with specific provision with, for instance, notion of principal investigator. The same for the EIT kick action, the same for Marie Curie action, and the same for EIC action. So this is really, I would say, the main area and the main place for reading and having a look at this very important policy-related obligation. If we continue with the structure and a little focus on the Annex 2, I will not repeat what is written, but maybe with this slide afterwards it will help you, because I know it's really small when you have a look at the model grant agreement on the participant portal and the funding portal. No, it's very tiny, but you will see here all the different budget cost category. And of course, this budget cost category reflects the narrative part of the model grant agreement. So meaning the budget category which are listed under Article 6.2 onwards in the model grant agreement. So everything about personnel costs, about subcontracting, about this umbrella budget category purchase costs, where you have the travels and subsistence, the equipment, the other goods, works, and services, and other cost category you may also find in your model grant agreement. So it's normal that this Annex 2 fully reflect as a narrative part regarding financial cost eligibility aspect in your model grant agreement. So now I would like to give you a bit more information about the beneficiary and the participant in general, the type of participant in general involved in the action implementation. So we'll not spend too much time on this slide, but this slide is just a summary of type of participant involved in the action implementation. You have the beneficiary, of course, so meaning the legal entities that sign the model grant agreement, so either directly the coordinator, he co-signs, or via an accession form, you enter into the model grant agreement if you are a beneficiary and you are not the coordinator. And alongside to these signatory parties, you have third parties, because they are not signatory parties. So you have different type of third parties, and they are doing different things in this in the action implementation, and this is what we'll see together in the next slide. So the first block, if you want to summarize the thing, are the third parties carrying out work in the action. So really third parties that are doing also a part of the action task by themselves. So you have here three types of third parties doing action tasks by themselves: affiliated entities, associated partners, and subcontractors. And if we start with affiliated entities, I think now this notion you have started to get acquainted with, but to be very, very clear and short here, affiliated entities concept in Horizon Europe is exactly the same as the linked third parties concept in Horizon 2020. We have aligned the labeling, the definition within this so-called corporate context, as I was mentioning at the beginning of this presentation. So to have common wording, common labeling as much as possible, especially definition labeling stemming from the EU financial regulation. But it's exactly the same concept as the linked third-party concept in Horizon 2020. So basically, for those who are already familiar, they must be identified in the grant agreement. Their task as well must be mentioned in the Annex 1, and they have also to complete their budget line in the Annex 2. This has to be also reflected there. They follow the same cost eligibility criteria than for the beneficiary, and they are de facto treated like beneficiary in the sense that they have also to prepare their own financial statement, provide their own certificate and financial statement where applicable, some contribute to the technical reporting aspect, etc., etc. But of course, from an IT perspective, technical perspective, it will be the beneficiary to whom this affiliate entity is linked that will have to push the button, so to say, in the IT system. But they are like beneficiary, but not signing the grant agreement, and they are linked to a beneficiary. But I think you know quite well this affiliate entity / linked third party in Horizon 2020. Now, the associated partner concept. This is something that is certainly a bit new, at least the wording on the labeling, but it's inherited, so to say, from the international partner status, which has been introduced also in the course of the implementation of Horizon 2020. So it's a bit the legacy of this concept. It's also something that will be encountered or kind of a type of participant that can be also encountered or seen in other EU programs, because it will be a kind of corporate commission-wide labeling. And what they do, this associated partner, they perform action tasks, but they basically cannot declare cost. They can be linked to the whole consortium or to a particular beneficiary. I just understood that for technical reason, if they are linked to the consortium, they have actually to be linked to the coordinator from a technical perspective, an IT perspective. But they can be linked to a particular beneficiary, and this can be reflected as such in the model grant agreement, a bit like the affiliated entity where you see the link to a given beneficiary. And the beneficiaries then must ensure that some relevant model grant agreement obligations are also passed on this beneficiary, extended to this associated partner. Can be through bilateral specific agreement or via the consortium agreement. It depends. This is really up to the consortium and to the beneficiaries to see what would be the most efficient or what kind of agreement is really better to capture this cascade of obligation to be observed and complied with by associated partner. So this is mentioned in my slide. It's all about the proper implementation, so obligation about the proper implementation of the action, notion of conflict of interest, confidentiality and security related obligation, ethics, visibility obligation, also these so-called specific rules for carrying out the action that will be further reflected in the Annex 5, actually. This Article 18 points to the Annex 5 of the model grant agreement. Things about information and things about record keeping, especially the technical implementation, because of course, associated partners are not declaring any cost. So this is what you have to keep in mind in terms of features attached to this associated partner kind of third party. Subcontracting, subcontractors. Here, it's basically continuity with Horizon 2020 in the sense that they also perform action tasks. And what you have to what you beneficiary, when you subcontract a part of your action task, what you have to ensure is when you do that, you do that in compliance with best value for money or lowest price where it is appropriate, and you avoid conflict of interest. You know that also from Horizon 2020 that subcontracting between beneficiaries is not allowed. Also, generally speaking, except where there are exception cases or you have a framework agreement already in place, subcontracting to affiliates generally is not allowed either. So why is so? It's because mainly in that case, for instance, subcontracting between beneficiaries, it should be for each beneficiary to declare its own cost. And like this, we are fully respecting the sound financial management in the sense the model grant agreement will not cover any profit margin, which is not really justified because each beneficiary can really declare their actual cost, and there is no need to cover such a profit margins that may arise between in a subcontracting context. Their estimated cost and task of this subcontractor must also be identified in the budget. So to understand who does what, it's always the same concept, the same approach. If you have not mentioned this subcontractor or you have not expected to rely at the very beginning on subcontractors, you have also this continuity version 2020, a so-called simplify approval procedure. So meaning that at the reporting stage, you can explain that you have actually called on a subcontractor to perform some action task. But if you do that, you may bear the risk that the cost of the subcontracting is not accepted. So generally speaking, it's always better to discuss with your project officer to keep him or her informed about what is going on, and she will see, for instance, an amendment of the action is needed or not. But you have still this possibility to, so to say, have a simplified approval procedure if subcontracting was not initially foreseen. And of course, beneficiaries are responsible for the proper implementation of their third parties in general and also for their subcontractors. You have also other third parties. So this first chunk I just explained was really about third parties performing action tasks themselves by themselves per se, and you have also third parties who actually help the beneficiaries to perform their action task. And here, the way you can regroup these third parties is as follows. You have all third parties involved, so to say, in the notion of this umbrella cost category of purchase costs. So it's everything about the travel, accommodation, and subsistence related cost, the equipment cost, or other goods, works, and services related cost. For instance, you have examples there, everything about consumable and supplies or related to dissemination, protection of results can be covered by this other goods, work, and services cost category. So of course, you will rely on these third parties providing you with the service or the work or the good. So this is also something pure continuity, nothing new as compared to Horizon 2020. You can also still rely, also continuity of Horizon 2020, on in-kind contributors, and meaning really here people who give you something, for instance, second someone, provide you with an equipment or access to an equipment free of charge. This is really important, and I will just spend a little bit of time on this notion of in-kind contribution. Strictly speaking, now the in-kind contribution, and this is also to be fully in line with the financial regulation. It concerns in-kind contributor giving something to the beneficiary for the beneficiary to implement the action free of charge. We have still specific provision to have this eligible because it's a derogation from the financial regulation, and it's a derogation we have in our Horizon Europe legal base, in our Basic Act. And we continue basically with the approach in Horizon 2020 in the sense you declare the related in-kind contribution free of charge in the respective cost category, as if this cost was incurred by the beneficiary. If it concerns the secondment free of charge of an employee, you will declare this seconded employee free of charge in your personnel cost employee cost category if you are a beneficiary. On the other side, we will not have anymore this concept of in-kind contribution against payment per se. This will disappear. in Horizon Europe. It's also a corporate approach, a common approach we will have across EU programs. But it doesn't mean you cannot continue to valorize, to declare the cost besides this former labeling of in-kind contribution against payment in Horizon 2020, and how and where you can continue to declare this cost. Basically, under three cost categories, either, so it all depends what is at stake, what is covered by this in-kind contribution against payment. If we speak about the segment of a personnel against payment, you have a specific budget cost category in the budget table or in the financial statement for seconded person against payment. If it concerns an equipment against payment, it will have to be declared as renting cost for equipment, so in the equipment cost budget category. And if it concerns something else, for instance, a good or a service provided against payment, you will declare it under this C3 budget category for purchase of goods, works, and services. And on these categories, you will have, of course, the indirect cost flat rate that will be calculated automatically and will be counted. But this is what you have to keep in mind. There is no specific in-kind contribution against payment article, and this labeling has disappeared. But the way you declare the cost, besides, it's still possible. You have just to choose the right budget category as mentioned in this slide. After this, this focus on the third parties or participants involved in the action, now it's time to focus a little bit on one key budget category, and I think it's certainly the most important one in most of the project, the one about personnel. And before giving the floor afterwards to my colleague Niklas, I will just mention briefly with this slide that, as you know already, and it was the case for 2020, we will have still different categories for personnel, depending on the status or the relationship of the given person vis-à-vis the beneficiary. So it could be either employees, so people under an employment contract, or civil servant under an equivalent appointing act, or it can regard person under a direct contract or seconded person against payment, I was just mentioning, so category A2 and A3. Or we will still also have this possibility to declare, we will rely on the unit cost fixed by a commission decision to declare and valorize the personnel cost of SME owner and natural person which are involved as beneficiary in the action. So these will be the different budget categories for personnel you will see and under which you will have to correctly declare your related personnel cost depending on the status of the person. So now I think it's time for me to give the floor to my colleague Niklas, and then I will take over for the last slide. So Niklas, the floor is yours.
Yes, thank you, Julien. Hello, everybody. As Julien has presented in the beginning, we have now a commission-wide or corporate model grant agreement. And as part of this commission-wide approach, we have also, as you are probably very well aware by now, introduced a horizontal method for calculating actual personal cost for employees. So let's have a look at this first case that we have described in the previous slide, the employees with a fixed salaries. This is our commission-wide formula. Of course, you still have specific additions, like in the case of Horizon, project-based remuneration. But this basic case formula will be valid across programs. We have as a basis for this formula in our grant agreement, our famous daily rate based on a division of 215. And as you know, we have spent the last months drafting guidance on the practical implementation of this 215 daily rate through our annotated model grant agreement. This has been recently published, as you probably know. Next slide, please. Thank you. So for the drafting of the Agar, we have very focusedly looked into how to simplify the approach for the application of this 215 element in practice, meaning how do we apply these formulas for reporting periods that are more or less than a year? How do we reduce the number of mandatory calculations? How can we reduce the number of specific calculations needed? And how do we avoid over-declaration of days, which could also be a case of prohibition of double funding if you work in multiple actions. We came up, and that you can see in our recently published new version of the draft Agar, with a single approach that works over any period of months, be it the full calendar year, be it a 3-month edition, be it your usual 18 months reporting period. In all of these cases, we will work with a consistent pro rata of the 215. We will use a single calculation for reporting period now. This is probably the most important simplification and change vis-a-vis the previous draft version. We have considered that we as granting authority actually do not need you to require to do this calculation for each calendar year within the 18 months reporting period, which can very easily be already 3 different calculations plus extra cases, changes of circumstances. So we have slashed the number of mandatory calculations considerably to usually a single calculation per reporting period. Then we have come up to put all of this in a single formula that integrates all horizontal cases. And we have limited the declarable day equivalence to, again, the pro rata of 215 that will stay always in proportion to the reporting period. So for a full year reporting period, you will have the 215. And for 18 months, you will have a pro rata of the 215. So for 18 months, we may have 222.5 declarable day equivalents. So we always stay consistently within the logic of the pro rata of 215 over any and all situations that you encounter during your action. Could we go one slide further? Yes. So the result of all of this is our single formula here that is an approach that we believe covers most of the situations encountered by beneficiaries in our actions. The personal cost will be calculated by the day equivalence times the daily rate, as is the element in our grant agreement. You can declare day equivalence up to the pro rata of 215 during your reporting period, and divide this and multiply this by the daily rate, which is again divided by the maximum declarable day equivalence. So also here we have introduced a common factor. So we always work everywhere with a pro rata of 215, which results in this maximum declarable day equivalence. One slide further, please. The calculation of the day equivalence, which is, I think, the major addition to the new Agar version, is relatively straightforward. We use our consistent pro rata of 215, which you see everywhere now. You multiply it by the number of months within the reporting period, be it 3, be it 18, be it 12. And that you multiply again with the working time factor, be it 1 for full-time or 0.5 for 50% part-time. With this single formula, you can address, as we believe, most of the situations that you would encounter quite easily, and the same number will be your basis for calculating the amount of the daily rate. Next slide, please. Just to show you by way of example how we apply it in the case where we have a reporting period from the 1st of January 2022 to end of March 23, where we have a salaried employee working in full-time in 22 and then changing to part-time for the last 3 months. You would very simply, again, calculate for the full-time work part, your pro rata of 215, multiply it by the number of months, which would be 12 months in full-time, multiply it by the working time factor, which is 1 for full-time, 215. So that is our basic standard element. And the same you do for the 3 months in part-time. You have our consistent pro rata that we use everywhere now, times the number of months, which is 3, times the working time factor for 50% part-time, is 0.5. So for your reporting period from the 1st of January to end of March the following year, you could declare up to 242 maximum day equivalents that you also use to as a denominator for your calculation of the daily rate, meaning that after declaring 242 day equivalents in that period, you would have reached your complete potential incurable personal cost for this person. And that's it. Julien, next slide. And I'm giving back to you with that one.
So for this one, just give me 1 second. That's it. So here it's all about record keeping. So what you have to keep to justify your number of day equivalent for a given person spent on the action implementation. So here, 2 possibilities basically. Either you sign a monthly declaration, and there is a commission template available for that. So it's it contains minimum requirement. It has not so much items therein, but it's still something that shows enough information and reliable information regarding the day equivalent spent by a given individual on in a given month in the action implementation. So you can use this monthly declaration. You can use this template if you wish so, or if you have already something in place, a time recording system in place, you want to keep it, a reliable one. You can, of course, keep it. You can, of course, continue with it, be it something on paper, be it something computer-based, doesn't matter. You can, of course, continue with what you have if it is reliable and it works for you. So no obligation to switch and use this monthly declaration, only if you wish so. This is something available, offered to you beneficiaries. Continuing now with one specific aspect in personnel costs for Horizon Europe. So I know time is running, so I will try to be very brief. There will be just one slide on that, but it's just to say that we have a different calculation of the cost for the specific case of people receiving a so-called project-based remuneration. So what is a project-based remuneration? It is it reflects the remuneration practices of a legal entity where basically you give to your personnel a supplementary payment because this is a triggering event that justifies the supplementary payment. This person works in a project. You have an example on the left side of the slides. For instance, you give a bonus or you sign a new contract with a higher salary level when this person is involved in a project. And basically, what we have in place is a ceiling, is a capping approach, so to say, that your project-based remuneration, so what you pay as project-based remuneration to someone, will be eligible up to the remuneration, to the project-based remuneration that this person, this individual would have received for work in research and innovation project funded by your national scheme. And this is what we call the national project daily rate. So basically, and this is the right part of the slide, we ask you to calculate your action daily rate and to compare it with the so-called theoretical national project daily rate. And you have to take the lower of the two. And then you declare accordingly your personnel cost for the space. I insist on that for the specific case of people receiving a project-based remuneration. So note the general case just mentioned and presented by Niklas. So this is specific steps, specific calculation you have to do, and we will of course capture here what is and reflect here what has been put in the Horizon Europe Basic Act. These specific rules, what you have in the model grant agreement, is fully reflected what is in the Horizon Europe Basic Act about project-based remuneration. So just one last thing to mention, where you define in general your national project daily rate, so the amount, project-based remuneration amount you are giving to people when they work in research innovation project funded by your national schemes, it's either something mentioned in regulatory requirements, so could be the national law, could be your collective labor agreement, or maybe you have something, you have written internal remuneration rules, so endorse in your institution, and speaking about this project-based remuneration. Maybe it's not called project-based remuneration. It's not an issue if the concept and what is covered by these written internal remuneration rules is what I just explained. It's fully fine for us. The labeling does not matter, but you have to have something. If you have absolutely nothing, I will not explain now today, but you can go to the Agar, which is published even as a pre-draft. We will have a so-called fallback option for people, institutions who have nothing in their national law, nothing in their written internal remuneration rules, or things which are not based on objective condition. There is still a possibility to calculate a national project daily rate. So we try to cover all possible cases to keep it short. So this is what it is, and this is how you will have to declare this project-based remuneration related personnel cost if you have any in your institution. Now, finishing on something also important to mention, the certificate on financial statement. So here, things to have in mind is basically we will continue with the fact that we will ask this only at the payment of the balance. So in terms of justification, this will be due only at payment of the balance. It's already the case in Horizon 2020. But the basis for calculation and the threshold triggering the obligation to submit this so-called CFS will be a bit higher, and the basis will be the requested EU contribution calculated on all costs. So not only on the actual cost and unit cost based on your usual accounting practices, as it was the case in Horizon 2020. So bear this in mind. This information, so this threshold and this basis for calculation, and when you have to submit it, so at the end of the action, at the last reporting period, this is something mentioned, for instance, in the datasheet. When I was speaking about that at the beginning of my presentation, this is a kind of key information which is also reflected and mentioned in your first pages of your model grant agreement. One thing to have in mind, without entering into details, for beneficiaries with a so-called system and process audit, a SPA, without entering into the details, if after this thorough audit, if you prefer, to keep it short, you request for it and then the auditors grant it, if they grant it, and they go on the spot, they discuss with you, and then they realize this thorough system and process audit, and you get a low risk classification, it will come with benefits, and the benefits will be as follows. Either it will reduce, let's say, the thoroughness of any ex post audit that you may encounter, or it will increase, and it will increase in any case the threshold for submitting your CFS. So basically, you see, if you increase the threshold, normally the result, the positive result, because you get this low risk classification, is for the rest of the action, or certainly a lot of the action you will continue to apply. In Horizon Europe, you will not have to submit a CFS, because by increasing this quite significantly the threshold, normally you will be exempted in a larger number of cases. So this is the positive benefit you can get, notably with this SPA and low risk classification. Just to conclude now, this is my last slide. Of course, I'm pretty sure you know this place, or the funding and tender portal, but just to tell you that everything is there, notably the so-called reference documents. So if you are looking for more information and what is exactly written in this model grant agreement or in the template for application, etc., for instance, go to this page, of course, selection the Horizon Europe program, and then click on the plus button, and you will it will expand all the available document, and then you can have a look. And I think it's really the place to go if you want to see exactly how things have been written and displayed. So this will be my last word of advice, and now it concludes this presentation, and I think it's time to go into the Slido and get some questions. So thank you very much.
Thank you very much, Niklas and Julien. Indeed, we are already a bit behind schedule, so my suggestion is that we still continue for a while and go through the questions, as long as you can bear with us, in particular the speakers. So let's immediately start. First question: when will the first complete version of the annotated model grant agreement be available? in fact, it is available since 10 days, more or less. There is a new version on the place that Julien just showed. It is still indicated as a pre-draft, but it is now a complete pre-draft, covering also the specific articles and provisions for Horizon Europe. And of course, it is, we always emphasize that this is a living document in any case. So there will be more and things will change as we see that questions come in and so forth. Julien, Niklas, do you want to say, add anything on the further proceeding for the Agar?
Niklas, I don't know, you want to come in maybe here?
Yes, just to quickly say, so as Peter said, the complete version of the Agar in the sense of a draft will be available, of course, way before we have the complete version in the sense of the final document, which will be version 1.0. So I think at the moment we have now said we are at 0.2, and we're planning to have the real complete final version sometimes towards mid next year. But of course, we are now going batch by batch, we say, starting from the first articles down to the documents. And of course, we are now done with the first part, as you have seen, our update of articles 1 to 6, and this will remain more or less stable for the rest of the period. So we are just adding for all programs guidance now step by step.
Okay, the next question is a person month equal to 215 by 12, meaning 17.9 days? That's for Niklas.
Yes, so partially for Julien, because person months is of course something that you use more in Horizon. We wouldn't say though 17.9 days, because as we say in the grant and also in the guidance, we are rounding up or down to the next half day equivalent.
Thanks. Next, will the sorry.
What I can add is, in any case, the way you calculate person months, because person months is really something for, let's say, at reporting stage, but much more on the, of course, it's linked to financial, but to the technical aspect and the workforce you have put in the actual implementation. And here, it has not to be, let's say, confused, or it has to be distinguished, if you prefer, with the personnel cost calculation per se. So everything that Niklas shows you. And then the way you calculate person months, or what is a person month for you, it really depends also on your practices, the way you do it in your institution. And I know you may have let's say different rules or different approach to reflect what is a person month. For instance, especially for instance, the case of professor of university who have teaching and research activities, but still you consider that they are potentially they reflect to 12 person months for a year, for instance. So you see, it really depends on the way you calculate it, but it has to be really distinguished from the mandatory formula for reporting your personnel costs per se. Then I know we ask you this information, so number of person months per work package spent, but it's much more on the workforce aspect, what you have put in your action implementation in terms of staff effort. Then it has to be really distinguished with the mandatory formula. Very important.
Okay, next question. Will the legal and financial NCPs be able to comment on the draft annotated grant agreement? I can not give a definite answer here, because this is the chair of this group is my colleague Reinhard Schulte. But Julien, is there anything you could indicate at least?
Or I may indicate.
Or Isabel, yes.
Yes. Good morning, everyone.
Hello.
Yes, that we will have this continuous dialogue with the legal and financial NCPs in the next meetings, and we welcome their input on any feedback that they receive, maybe on the lack of clarity in the Agar. However, we have to keep into consideration that the legal and financial NCPs that we're talking about here are the Horizon Europe NCPs, and that we are now in the framework of the corporate Agar, and so that gives more limit to what we can say, there maybe we've seen behind comments on the draft Agar. So we welcome all input, but in the limit of what we can do for the Horizon Europe aspects.
Okay, thank you. Next question. In-kind contributions against payment no longer called this way. Do we have to keep proofs of best value for money, Julien?
Yes, for instance, if you are in the case I was presenting, so if it regards goods or services provided against payments, the normal rules apply there. So, and by normal rules, you have indeed for purchase of goods and services, best value for money, no conflict of interest. So you will have to somehow prove that best value for money is ensured. But what is already a good hint is if there is no profit margin, for instance, typically, which is something that happened normally in this former in-kind contribution against payment concept, that's already something that goes, I would say, in the right direction for proving the best value for money compliance.
Okay, next question. Are travel costs of external experts eligible costs in budget-based grants? My simple reply would be, it depends, but Julien, you will be more specific, I hope.
Yes, so we will continue with the approach we have and we explain in the Horizon 2020 Agar. So basically, if by expert you mean people we, from time to time, for instance, like visiting researcher, scientists are coming to help or work a little bit on the project, and your usual practices is to reimburse the cost of this visiting scientists, for instance, that will be eligible. But let's say that this should be mentioned somehow also in the Annex 1 at some point, or at least try to discuss this with the project officer. But yes, that will still be possible to have their travel cost reimbursed. But if it is, I insist, because this is really the main cost AGB condition we have for travel cost, your usual practice is to reimburse travel cost or accommodation cost for external experts coming, working a little bit from time to time in a given project, typically visiting scientists.
Next one, if an entity qualified to be beneficiary does not request EU funding, should it participate as associated partner, or can it participate as beneficiary requesting zero funding? The latter. It can participate as beneficiary requesting zero funding. Next one, rounding the number of days to complete days or half days should be done per month, per year, or per reporting period. I know the reply, but I would leave it up to Niklas to reply. Niklas?
Yes. So we have the rounding examples actually in the Agar guidance. As we said, it's to the nearest half day equivalent, so either 0.5 or full, and it should be done over your reporting period calculation.
Okay, very clear. Next one, is it still possible for entities from countries eligible for funding to participate? Ah, yeah, we had this question already. So it's a repetition of the same question. Yes, it's possible. Next question, associated partners, can this be only an international partner? Can an associated partner also be an entity from a member state? Julien.
It can be everyone coming from any country. So I know I said it's a legacy of international partner status, but I think the main difference here is everybody can be associated partner, basically. So generally, it will be certainly used for third country not associated and where you want to valorize their participation, but it can be someone from a member state or an associated country.
Next one, is owning a single share of another company's shared capital enough to constitute the capital link required by Article 187 of the Financial Regulation? Who wants to take this one?
I can. Here we will continue for the notion of affiliate entity and the notion of capital link. We will continue with the notion of control we have. It's not only having a capital link that matters, but it's this notion of control. Actually, we already explained for the linked third-party concept in Horizon 2020. So capital link per se is not enough. Notion of control is matters really here.
Okay, next question on the daily rate. How to handle personnel working on several projects with overlapping reporting periods? Different periods means different. Now the thing has switched on my screen. But I think the question is clear. Different periods meaning differences in the reported daily rates and more calculation. And I think the next question is exactly the same. So you can reply to both, Niklas.
Yes. So we have to first of all recall that this is a horizontal methodology. So we have developed this with our beneficiaries in mind, and our average beneficiary across EU project is of course not really active among several actions. However, assuming that we have a person that is active in multiple projects at the same time, and this is not just Horizon, that would be Horizon, that could be Digital Europe program, across program, it's again a horizontal methodology. If the working conditions don't change, if you have the same salary, then of course, normally it should also come to the same amount of the daily rate, because we are just applying a pro rata, so in proportion. For 215 days for full year, you have the full salary. For a half year, you have half the salary as a basis for calculation. So if the conditions don't change between projects with different reporting periods, you go in half time, etc. You have, in fact, a reduced number of calculations, and the amounts should match.
Okay. And I think we have now to close. I take one last question or two last questions. Is there any limitation in the action tasks that an associated partner can do, for instance, not leading a work package? Julien.
I think Petros already replied to this question in his presentation, but no, there is no limit per se, in the sense that they are involved, associated partner, and they can do any kind of action task. They can even be work package leader. I think it was clarified in the presentation of my colleague Petros. So it really depends on how you have, let's say, split the things and the breakdown. So basically, we expect in general, but this is in general, that beneficiaries are doing action task or most of the action tasks, but you see, everything is possible. And in any case, there is no problem if an associated partner is a work package leader. Per se, there is no problem.
Okay, and I think this one has now to be the last one we cover orally. Can the USA be a beneficiary in an MGA? If not, could you please explain the participation type? Julien, do you want to take it, or
I'm not an expert of let's say,
okay, I can take
but
it.
you give it a go, and if I need, I complete that.
So the USA are in the category of the so-called high-income third countries. That means entities in the USA are not by default eligible for funding, and therefore in Horizon Europe they are also not by default in a state to become a beneficiary, meaning to sign the grant agreement. So the default mode of participation for US entities is that of associated partner. So the entity must be linked to a beneficiary in a member or associated state, or to the consortium as such, with this possibility of associated partner. There are exceptions to this, and one exception is, of course, if in a call topic in the work program, it is explicitly stated that US participants can participate and get funding, then in this exceptional case, they can be beneficiaries as anybody else. And there is yet another exception, an exceptional exception, so to say, when in a certain proposal, the participation of the US beneficiary is considered by the experts, by the evaluators, as so absolutely essential that the project would not make sense without them. For instance, if there's a unique research installation infrastructure that doesn't exist anywhere else in the world, and that is absolutely needed for that project, in this exceptional case, they can also become beneficiary and get funding. But the standard, the default is associated partner, no signature of the grant agreement, no funding from the EU. Julien, anything to add?
No, that was my understanding, so I'm happy. Thank you very much.
Okay,